If you're a veteran or active duty here in Washington State, and there are a lot of you between JBLM, Fairchild, Whidbey, and Bremerton, chances are somebody has told you something about VA loans that just isn't true. And that misinformation is quietly costing veterans across the state thousands of dollars in unnecessary PMI, in higher rates, in benefits they don't even know they qualify for. Today, I'm going to walk you through the 5 biggest myths with real numbers from real files. And by the end of this video, you'll know exactly what your VA benefit can actually do for you. Okay, myth number 1, and this is the one veterans hear from friends, family, sometimes even their own agent. Sellers don't want VA offers. Here's the honest truth. This myth exists because there's a kernel of reality behind it. Sellers and listing agents sometimes hesitate on VA offers because of MPRs, minimum property requirements. VA has standards a property has to meet at appraisal, and if the home is in rough shape, those requirements can create real issues. Peeling paint on older homes, roof problems, some safety concerns. On a home that needs work, VA can be a harder sell. But here's what most people don't tell you. If the property is in good shape, none of that matters. VA offers compete just fine, often win when the home is in reasonable condition to begin with. So here's my actual advice, and it's not what you'll hear on most YouTube videos. 2 things. First, your agent matters. A good buyer's agent knows how to position a VA offer. When my clients make offers, we lead with how qualified they are, and we also lean into the human element of the story. This is a veteran family looking to put down roots in the Pacific Northwest. Sellers connect with that. Listing agents respond to that. If your agent isn't actively selling you alongside your offer, you may have the wrong agent. Second, be strategic about which homes you target. If a house has clearly been or has deferred maintenance, boarded windows, obvious roof issues, unpermitted work, yeah, VA might be a hard road. That's not the myth being right, that's just being realistic about what any inspector or appraiser would flag. Pick homes that are in reasonable condition, and this myth stops being your problem. Bottom line, VA offers are perfectly competitive on properties in normal condition, and the veterans I work with close on their first choice homes all the time. Myth number 2, VA loans take forever to close. Here's the honest truth. 2 or 3 years ago, there was some truth to this. VA appraisal turn times were slower than conventional, and that could push a closing date out. But the VA made real updates to appraisal turn times recently, and today, my average VA close is around 30 days, similar to conventional. In fact, let me tell you about a file I just closed. VA purchase, straightforward buyer, we were cleared to close in 19 days. The sellers were the ones who didn't want to close early. The loan was ready. So, where does this myth still have some truth to it? One place, if you need a super fast close, like a competitive offer with a 2-week close date to beat out other buyers, conventional gives you a slight edge. Why? Because they have the ability to order rush appraisals. VA doesn't allow that. So if the difference between winning and losing the house comes down to closing in 14 days flat, conventional has a small advantage there. But for normal 30-day close, which is what almost every purchase contract calls for anyway, VA is right there with conventional. No delay, no disadvantage. So if anyone tells you we can't accept your VA offer because it'll take too long to close, that's outdated information. Show them a copy of your pre-approval letter, offer for a 30-day close, and move on. You're not costing them time. Myth number 3, the VA funding fee makes VA loans worse than conventional. This one's my favorite. to burst because it's pure math. Yes, the VA funding fee exists. If you're a first-time VA user and put nothing down, you're looking at 2.15% of the loan amount. Subsequent use, 3.3%. On a $500,000 home, that's roughly $10,750 for a first-time home buyer. And now I get that number scares people. It sounds like a lot up front. Nobody wants to write a bigger check. But here's what almost nobody explains to veterans about the funding fee. First, you don't write a check. It rolls into the loan, you finance it, so you're not out of pocket for that fee. You just have a slightly higher loan balance. Second, and this is huge, a lot of veterans are exempt from the funding fee entirely. If you have any service-connected disability rating, or if you're a surviving spouse of a service member, the funding fee is waived completely. This is money veterans leave on the table because nobody told them to ask. Third, and this is the math nobody walks veterans through. Let's actually compare VA to conventional on a real scenario. Say you're buying a $500,000 home. On the VA side, no down payment, funding fee rolled in, and right now VA rates are running about 0.625% lower than conventional. Your monthly payment lands at about $2,981, and critically, 0 monthly mortgage insurance. Now compare that to putting 5% down conventional. You're out of pocket $25,000 for the down payment, and you're paying a higher interest rate, and you're paying about $180 a month in PMI on top of your principal and interest. Total monthly payment ends up around $3,144. VA is $163 a month cheaper, even including the funding fee. Over 5 years, that's about $10,000 in savings, plus you kept $25,000 that you would have had to put down. So we're talking about a $35,000 advantage in the first 5 years alone. The funding fee sounds scary. The math tells you the real story. And the story is, at any LTV above 80%, VA wins decisively because you're avoiding mortgage insurance and getting a better rate, full stop. Okay, myth number 4, and this is the one that keeps veterans from using their benefit multiple times when they absolutely could. You can only use a VA loan once, and this is completely false. And once you understand how entitlement actually works, you'll see why. Let's start with the basics. If you've never used your VA benefit before, this is what's called full entitlement. There's essentially no cap on what you can buy. 0 down on a $500,000 home, a $1 million home, or even a $1.5 million home if your income supports it. First-time VA users have massive purchasing power that most people don't realize exists. Now here's where it gets interesting. What if you already have a VA loan on a home that you're keeping? Maybe you got orders to relocate or you're moving up and want to keep the first house as a rental. Can you use VA again? Yes. This is called bonus entitlement or second tier entitlement. And the math works like this. Every VA eligible person has a total entitlement amount tied to the conforming loan limit in the county where they're buying. In our market, King, Pierce, and Snohomish counties, the current conforming limit is roughly $1,064,000. Your total VA entitlement is 25% of that, so roughly $266,000. When you use VA, you use up a part of that entitlement based on the loan amount, specifically 25% of the loan amount you borrowed. Let me walk you through an actual scenario. Let's say you bought a house for $400,000 with a VA a few years ago. You used 25% of that loan, or $100,000, as your entitlement. So you have $166,000 remaining. Multiply that remaining entitlement by 4 because it covers 25% of the new loan, and you have your new purchasing power. In this case, that means you could buy another home of up to $664,000 with 0 down, keeping your first home, again, assuming you qualify income. Think about that for a second. A veteran who bought a starter home years ago in Pierce County can, right now, buy a bigger home for their growing family for 0 down and turn the first house into a rental generating income. That's generational wealth building through a benefit that they earned. And this is where most people stop learning. But there's actually more. When you sell your first VA financed home and the loan is paid off, your entitlement is fully restored. You're back to first-time use levels. Some veterans have used VA 4, 5, 6 times over their lifetime. So the next time someone tells you you can only use the VA once, they're wrong. And that misinformation might be costing you the ability to build real wealth. Myth number 5, VA appraisals are stricter and they'll kill your deal. Let's take this apart because there's some confusion here that hurts veterans. VA appraisals check what are called minimum property requirements, MPRs. And MPRs sound scary because they have an official name and a government acronym. But when you look at it, what they actually require is pretty reasonable. MPR means 2 things. 1, the property has to be in overall reasonable condition. 2, there can't be any safety or health hazards. That's it. That's the whole test. Now, what do we actually see flag on VA appraisals in the South Sound? A few specific things come up most often. Roof condition. If a roof is at the end of its life or has obvious damage, that's a flag. Older decks, especially ones without proper railings or with visible rot. And peeling paint, particularly on homes built before 1978 because of lead paint concerns. Are these unreasonable standards? Not really. Any home inspector would flag the same thing. Any buyer with common sense would want them addressed. VA isn't asking for perfection. VA is asking for a home that's safe to live in for the veteran. So here's my practical advice, both for veterans and for listing agents who are working with VA offers. If you're a listing agent, walk the property before you accept a VA offer and think like an appraiser for a few minutes. Are there holes in the walls or floors? Fix them. Do the stairs have railings? Do the decks have railings that meet current code? Is there any peeling paint on the exterior? If there is, address it. 10 minutes of walkthrough can prevent a week of appraisal drama. Now, before I give you my final take, one more thing that's worth knowing, because it's a benefit that keeps working for you even after you close. If you buy a home with VA and interest rates drop later, VA has a refinance product called the IRRL, the Interest Rate Reduction Refinance Loan. And here's what makes it different from a conventional refinance. In many cases with an IRRL, you don't have to provide income documentation, you don't have to provide credit documentation, and you won't even need a new appraisal. It's what VA calls their streamlined refinance program. And honestly, they nailed the name. It is a streamlined process. Okay, so those are the 5 biggest myths costing Washington veterans real money. Let me leave you with one more thing, because after 30 years in this business, this is what I actually think. If you're VA eligible and you're not putting at least 20% or more down on your home purchase, VA is absolutely the best loan option for you, period. 0 down payment, no monthly mortgage insurance, interest rates that are about 0.625% lower than conventional right now, more flexible qualifying. VA looks at residual income instead of just straight debt to income ratio, which means you get credit for how much money you have left after your bills instead of just a percentage. Ability to use the benefit multiple times, sometimes even keeping the first home, and a funding fee that's waived entirely if you have a service-connected disability rating. If you've served, this benefit was earned. Every dollar of PMI you're paying on a conventional loan is money you shouldn't be paying. Every rejection you got because sellers don't like VA was based on outdated information. Every time someone told you the funding fee was expensive without showing you the math on what it actually saves you, that was someone who didn't either understand your benefit or didn't care to explain it. Okay? You earned this, use it right. If you're a veteran or active duty near JBLM, Bremerton, or anywhere in Washington State, and you want to actually understand what your VA benefit can do for you, real numbers, real math, no BS, head to johncobainhomeloans.com. We do about 45 VA loans a year as a branch, and I've been doing this now for 30 years. I'll show you exactly what your buying power looks like across VA, conventional, and any other option that fits your situation. If VA is right for you, we'll walk through it. If something else fits better, I'll tell you that too. Hit subscribe if this was useful. Every week, I try to break down something educational about loan products in the mortgage business, and every Friday, I give you a weekly market update. I'm John Cobain, mortgage broker, Edge Home Finance NMLS 374881, 30 years helping Washington homeowners. Thank you for your service, and I'll see you in the next one.